Darren Pollock is portfolio manager at Chevier Value Management and joins us with his assessment of what he made of that letter. Of course, the company he represents has assets under management of over $500 million in Berkshire Hathaway, is the largest holding in his portfolio. He, like I said, joins us from Beverly Hills, California. Great to see you, Darren. Thank you very much for your time. Give us your own review of the letter and what it means really for the investment climate in the U.S.
Well, as far as the investment climate itself, Buffett touched upon that a little bit. He said that bond yields are very, very low, and fixed income investors are going to have a real tough time prospectively. And I think for somebody like Buffett, he would say, look no further than a company like Berkshire Hathaway if you're looking to invest conservatively in a great business that has a great runway for growth ahead of it. And he touched upon that in the letter by stating that just last year, Berkshire's operating earnings declined by a few percent, but Buffett himself was actually able to increase the intrinsic value per share by the intelligent use of share repurchases throughout 2020. So he really liked what happened at his company, and he liked the stock price being low. He took advantage of that, and we were pleased with that as well.
You know what stood out for me was his holding in BYD, which happens to be higher than his exposure to General Motors. And what does that tell us about his bet on new tech, and especially how he's playing the EV theme?
Well, his bet on BYD actually was something that was made several years ago through Charlie Munger and one of his favorite investment managers, Lee Lu. And so that's something that has really mushroomed in price with the EV euphoria that we're seeing. And I don't think it's really actually Buffett related so much as it is just one really great investment that was made by his partner, Charlie Munger, several years ago. However, we think that the EV industry, while great for the planet, great for the world, may have picked up a little bit too much euphoria in the interim, and prices might be quite elevated. So that's something that's appreciated dramatically for Berkshire, but we're not sure how long that'll last. It'll certainly be a bumpy ride.
Darren, Mandy jumping in here. When there's an incredibly inspirational leader, a founder leader, the likes of like Steve Jobs or Elon Musk or Jeff Bezos, and of course Warren Buffett, we always try to work out, well, what is that leader worth to the share price? What's, for example, the Buffett premium to Berkshire Hathaway? At 90 years old, it's a particularly pertinent question. What do you think?
We actually believe that there has been no Buffett premium placed in the share price for quite a few years now. I think the Wall Street and the investment community, they're kind of looking past the Buffett era, and they're looking at the second tier of executive talent that he has there. And we wish that he had expounded a little bit more on that in the letter. But on second thought, actually, if that meant that Wall Street would warm up to the shares and push the shares higher, then it means that Buffett would have to pay a higher price for the stock, and he wouldn't be able to buy back as many shares, which is actually a benefit to us as long-term shareholders. So we were pleased that he didn't go and tout his younger investment team there.
Are you confident in the second tier?
Very much so. He's had a group of talented executives around him for quite a long time, to the point where they've actually been accumulating other talented executives to run different divisions at Berkshire. And so they've built quite a bench. And I think it's something that the investment community isn't as aware of as it should be. But I think that Berkshire has a good long road ahead of it in terms of well-managed, good businesses under the Berkshire umbrella.
Given his cash reserves, Darren, which is an open secret now, $138 billion, do you think his focus on middle America is where he would go next in search of value?
I don't think he really looks in a particular place other than wherever there happens to be value. And so if it's purchasing pipelines from Dominion Energy, or if it's buying a company on the West Coast or the East Coast, or maybe even abroad, or if it's buying his own shares headquartered right there in Omaha, Nebraska, I don't think it matters so much as long as he's getting growth and as long as he's paying a good price for that growth.
If we can just move away from the letter and talk about the markets in general and where you see them heading, Darren. I mean, we've been talking so far this morning about the tug of war going on between the capital markets pushing yields higher, and of course the central banks try to keep them artificially lower. Who's going to win?
That's the billion-dollar question or the trillion-dollar question, because we've got capital markets that are sniffing out inflation finally, and they hadn't feared inflation for a very long time, and suddenly they feared it all at once last week. And the Fed, on the other hand, needs to continue to finance these tremendous deficits that are only increasing this year again. And at the same time, walk that tightrope and tell the markets that they won't let inflation get out of control. So it's a really interesting position that the Fed is in as they butt heads with the fixed income market that might be fearing inflation, at least in fits and starts. Overall, over time, we do expect to see greater inflation, and the bond market might push rates up, and the Fed will have to come out and say, don't worry, we'll do whatever we can to push rates back down. They have a very tough job ahead.
No, they do, and that's the key debate going on in the markets. Darren, very quickly on essentially understand, and I want to circle back really to Mr. Buffett's philosophy right now in the markets. Do you think infrastructure-related themes, badgered sectors like energy, with his position built up in Chevron, is the place where there could be value emerging? Because we had a guest earlier on, Professor Ashwath Damodaran, who was saying that, look, with energy prices have already gone back to pre-pandemic levels, so the upside is capped. But whether it's railroads, whether it's infrastructure and related themes, is that the area to look for essentially an investment interest?
Well, it was a few months ago, and that's when Berkshire was buying its stake in Chevron, and it was at the same time that it purchased its stake in Dominion. And so it was able to get those prices at levels that were below where we're seeing energy prices today. Over the next couple of years, I think buyers of energy-related investments will do well, because we are of the impression that oil prices will be going a little bit higher over the next couple of years. Maybe that's inflation-related. Maybe it's because of a lack of supply coming out of the United States. But I think he'll find value in that sector. And I think outside investors need to be cautious, however, for that field, because some pockets have run up and other pockets might have still lagged behind.
Darren Pollock, thank you very much for joining us today.